Yes, you are audible.
Yeah, okay, sorry about that. Internet's kind of scuffed.
Sure. So we were talking about on the daily we had a proper bearish trend on to LQTY. If you see was a new token on the Binance. So there's a small trick that we can apply to it also, that whenever a token launches on a certain exchange, like one of them is Binance, you have some certain key levels marked and short the coin. But eventually that is not how it actually works. There are other certain factors to it. If we look over here, we saw a proper continuation of downtrend, like the price made lower low, lower high, lower low, lower high, and then continue to go there. Once we had this sweep projection, like we had this bounce from here. One of my favorite pattern to trade is the ladder case. Okay, so what happens on the ladder case pattern is basically, let me give you a visual representation of it. Price actually dumps and it tries to regain that level back, like lower low, lower high, lower low, tries to get in that volume, create more FOMO. Once people see that the price has reacted to the support levels, they try to long that certain coin. So what happens that after a three case ladder is formed, that is the point where either you get a rejection from a golden Fibonacci, or either you reject from an order block, FVG, or whatever your confluence to the trade is. Similarly, if you look over here, uh, this was the breakout structure that we had. We try to see, this was the pattern that we were talking about. Price dumps, it tries to gain that momentum a little back, and then it dumps again. So what happened here? What happened here was price actually dumped. We had a little breakout structure here. Okay, so we mentioned a break structure as an X. So price actually had a breakout structure here. If we see here, the same thing happened if you see on the H4 time frame. So we had a breakout structure here, a more cleaner one, because the upper one was induced with more liquidity grabs. Apparently, the price made a dump to the point, and this was the golden Fibonacci that I was looking for. It was a pretty much easy trade because these are the pattern that I'm used to of trading. Price dumped, made a ladder case, try to induce new buy orders, like the early buys, and once it reached the golden Fibonacci, it actually rejected from there, and that was a pretty much easy 10-hour trade from there.
Yeah, looks good. Thanks for going over that. And yeah, just real quick, you also shared with us the long position on Ren, and that was just using a higher time frame level on the daily charts. So it broke out of the previous trading range and continued to hold above. And from that, we can draw a fib retracement from the swing low to swing high, and look for the price to hold above the OT fibs. And you can see that's sort of what happened here. And from there, we can take an entry and stop loss below the 79% retracement and potentially target the 162% extension level. This is Bitcoin long setup. Same thing as before, the draw on liquidity as a sweep of the lows and also filling in a 4-hour fair value gap. Following that, you can look for a break of structure, or you can look for a second sweep on lower time frames and look for the next liquidity target, which is right above, based on that trend line. And you can also see the use of the OT fibs in this example. We have the one anchored on the swing low and then moved up to the swing high. And price we expect to hold above the OT retracement zone. And with those multiple confluences and the liquidity target above, we can see the expansion and the target being fulfilled. Do you remember this RLC short setup, Ahmad? He showed it in the staff alerts on the 9th of June. Would you like to just quickly go through it?
Sure, sure. Okay, so this was one of the promising settings that we have been talking about lately. The one same applied on the RLC2. Sorry, LQTY2. So if we see on the daily levels, I actually use Fibonacci's on daily levels because they respect more on higher time frames. So if we see that as a pretty messed up chart, but eventually what happened was, if we see here, okay, so this was the daily trend line, or what you can say is a meme line that was forming. You see here that the price tried to hold up pretty much here, but it dumped and then it tried to retest this level back again. We ended up being into on lower time frame. If we see that was the resistance that was actually made up. Okay, so this was the rejection that was pretty much made up. And if you see on the lower time frame, we rejected through my golden Fibonacci's, the one marked with the purple, 0.618 and 0.666. Okay, on lower time frame, if we see here, let me get back a little. Hmm. Okay, so this was pretty much it. If we see that we rejected from the H4 resistance that was built up of the previous liquidity, we rejected from the meme trend line, we rejected from the golden Fibonacci. This is certainly this specific wick is called as inducement, because what actually happens over here is this certain pattern is formed on high time frame. Either you look for it on an hourly or a 4 hourly, and what actually happens is the price tries to take the early buys in. Once the early buys kicks in, price retraces back to the PY or the fair value gap zone. Once, if you look here, price try to hold here. This is on the hourly, so on the 15 or the lower time frames, you can see a proper candlestick forming over here. So if we see, price rejected the golden Fibonacci's, had an inducement, came back down. On lower time frames, if we look, it came back to retest the resistance. Okay, so there are like certain multiple factors that I look for entering a trade. Either I have certain mid-range support and resistance level marked on my daily or 4 hourly, most probably, and then look for a Fibonacci retracement, or I then look for a lower time frame breakout structure happening on it. So price actually had a lower. If you see on the 1 hourly, we had a breakout structure. This was an hourly breakout structure that actually created over here. Okay, so once the breakout structure was made, we looked for an order block rejection, and this was an hourly order block that we had over here, like this one. So this was the bearish order block. This can be refined more on the 15 or the 30 minutes, and we could get the defined entry. Probably when we entered was a more defined order block on the M15. Eventually, the price rejected from here, went straight back down. This was more of a fade the pump trade, and pretty much was easy gains for a 10% move.
Yeah, good stuff. Thanks for explaining that. And yeah, it's a very good setup. We had the very strong weekend dump afterwards, which allowed like an expansion below even like your lowest target. Just quickly, this magic long from 27th of May plus 79% with no drawdown. It's an example of using like different sort of trading concepts as further confluence with smart money concepts. So the use of the EMAs here on 1 hour showed that there was a crossover and compression, as in like the four EMAs sort of came close together, and this sort of signaled an incoming expansion. And in terms of a smart money concept perspective, we had a sweep of the range low or swing low here, break of structure, and order block retested. So with that, we can see that the price quickly expanded towards the upside and reached the target based on a fair value gap and order block level. Lastly, Forex example. This was a trade I took just a few days ago on the euro, and you can see this level here is a daily high, and then we had a double sweep on the lower time frames of buy side liquidity, followed by a break of structure and retracement to the breaker block. And if you draw a Fibonacci retracement from the swing high to the swing low, you can see that it created the OT entry zone, which is 61.8 to 79%, and that coincided with the breaker block. So that goes back to my previous discussion about like knowing which PDOA to use. Right. So here, multiple confluences, breaker block, OT zone, and fair value gap just a little bit above. So we'll just wrap up the stream soon, and we'll finish up with some live market analysis. Ahmad suggested we could do a BTC chart analysis from scratch. So yeah, let's go ahead and go to that. Ahmad, do you mind pulling up like a fresh Bitcoin chart and just use like the exchange?
Yeah, sure. Do you want me to do it like on a different exchange or so?
Yeah, sure. You can just go through how you analyze a fresh chart.
Okay, sure. The one I use is basically Binance, but we would be discussing a Bybit chart, you mean refresh.
Yep.
Okay, so this is the H4 chart, and what I add to my bias is that I wait for the weekend to over, and most probably what traders do is they consider like the weekend is over and we start trading from Monday. Recently, I changed my bias from trading Mondays and start to trade from the Tuesdays just because I wait for a Monday range to form. And recently, how it helped me is like I would discuss about the Monday range later, but just address like some key levels. Like if you see here, this is too much momentum. Like you can get like a easy 3 to 4% move on the BTC recently, and it is pretty much volatile in ways of liquidity hunts and stop losses. So if you see here, what we have been doing recently is this was one of the sell side liquidity, you can say, or you can just say as a liquidity graph. And we have been respecting this level quite often, like they're like almost three touches to it for now. Okay, so if you look here, we got this touches, and price actually tried to bounce straight back from here. What we see is how we validate that it's a valid sell side liquidity wick or not. It's just like either it has a previous conference or either it is on a high time frame. You also see that we bounce back to the region, and then there was this wick that actually from 29,812 to 29,440 4415 in specific. So the price actually did was try to take the stops. Like if you had a position open from here and there was a long position on the wick, there were a lot of order books or there was a lot of the orders that were like smashed out just because of the reason that the market makers, you can say, try to introduce. Apparently, there was an H4 FVG2 over here, just right below. So the more better confluence to that was the F, like you can take one entry on the sell side liquidity, and the other entry was on the fair value gap, like a DCA position. Apart from that, I look for some previous sell side liquidities or the previous liquidity buildup. Like we see here, this is a quite important zone for BTC. We have been ranging in this market for almost like 3 weeks right now. So if we see here, and we waited for the weekend to over, we waited for the weekend manipulation to end. This was on 9th, right? Okay, so this was 9th. Yep. This was the Monday low, or you can say as the Monday range. I trade them as Monday high and Monday's lows. This can either be planted manually or either be planted with an indicator. Just for a quick reback, and there's an indicator named as mean levels, and you have certain settings for it. Is like you can just turn on the Monday lows and Monday's high for that. So if we turn on this indicator, these are the exactly levels that I marked, like the Monday range and the Monday high. So what happens from here is, what I did be looking here is the price to actually sweep any of these highs. Either it would be something like this to form. I would wait for a break of structure on lower time frame and then enter on to the order block or the breaker block, and then aim for the lower liquidity. Or on the other hand, it could do the same, like take out the lower liquidity first and then wait for the price to respect that liquidity region. And these are the one of the best trades or the best setups, good IR setups that you can take. Talking about some important levels we have is onto the other BTC chart on the Binance, ones that we have placed earlier. And this is a key advice that whenever you are about to trade or you want to have a daily bias out of it, always like have a monthly or a weekly chart in mind, then trade those levels in between. So we have onto the 4 hourly chart, that is the red zone is marked as a POC, point of control. Point of control, for those who do not know, is the place where more of the volume or the buy orders, sell orders are placing in. One way is that you can have a tool for it, like the fixed volume profile tool for it, and actually mark it somewhere like this, and it actually tells you the different POC levels, right? This can also be plotted automatically onto the paid version. This account is not locked into the paid version, so it's like I plant the manually. So this is the point of control we are rejecting to something like this. But I would still wait for the price to go through this level, like 31040 level, and then reject over here, and then wait for a break of structure or a rejection to form, and then enter on the fair value gap of the order block, and then we target the lower liquidity, something like this. Either it would take the lower liquidity first, or either it would go reject from something, take the higher liquidity first, and then target the lower liquidities. That is the best way to trade these ranges, and anything in between is easily be too chopped out. What I prefer going to the market, as you have seen in the staff leads or whatever trades I share, that are purely based upon limit orders. The reason for that is you get a better market entry for that, and you don't have to look for a trade. You have proper invalidation points. Recently, if we look onto the Lena trade that we took, was pretty decent break of structure. The stuff that Jodes actually explained was pretty much explained in that. So I would like just bring in your notice for a bit. So if you turn on these Monday highs and lows level. Okay. So if you see on the hourly, this was the setup that I actually looked. If you see what price actually did was it took the lower stops and reacted from the same level. These black zones are the daily POI levels that I have marked and point of interest. Someday later we would stream about how to mark these POIs level. But if you see here, price actually tried to retest that sell side liquidity or the liquidity zone, you can say. It went up, reacted, went up, tried to make another high, break that structure, reacted that order block, and then price went up again. Reason I did not entered over here was just because that is an easy market maker structure, and that is an easy thing that institutions look for. Like, let me give you a visual representation for that. Is once price, let me go ahead. Okay, so here we have. Once price goes up, makes a break of structure, like this is the break of structure we have, and it makes a lower low. The reason you don't end at this level is that because most of the buy orders kicks in over there, and you can say as a FOMO, the price would either reject or either would make a sweep of like 1 or 2% move, and then it would go for the lower order block. Once you had that lower order block, that is your perfect entry to kick in. Most of the SMC traders, or you can say the retail traders, fail to understand this, is that the first break of structure order block or the liquidity or the buy orders build up like this zone here, people actually enter this zone, have their stops below something like this. Okay, so they have some like TP above the previous highs and have their stops below the level. Price, okay, price actually get back to their stop losses, behind their stop losses, and then actually it went up. The actual reason for that is this is a place where buy orders kick in. Like market tries to take away the early buys and then it induced with a lower order block. Same happened here. We had a break of structure. This was the break of structure we had, and then price made another higher high, breaking that this structure. We waited for the lower order block. This order block was substituted by you can have a 0.702 Fibonacci, so that more it had more confluence of the order block. So if we see on the setup here, price actually pumped back to the same region. Another example for this is the FTM setup we had right now, which I closed a bit early considering the BDC conditions. I was expecting a retrace, which actually happened, but FTM actually holded up a bit stronger out of it. So if we see here, this was the point of control. This was the H4 bullish divergence that we were building upon. Uh, if you know a little about SMC divergences, or it actually happens like the price makes a lower low and the RSI makes a higher high. That is what we call bullish divergence. So price actually made a bullish divergence. It tries to break the previous high above for the first time, but it actually rejected. And my entry or the key zones were the POC. So the price actually respected the POC level. This POC was actually a SR flip level too, like a support resistance level for the price too. Many of the buy orders were, or the sell orders were sliced in. Those who shorted this were waiting for this low, but price actually respected that SR flip level, or you can see as a point of control level, and actually went up. So this is a pretty decent setup if anyone of still is holding, is because it actually had a valid break of structure and price actually went back up. Another way to identify or enter here is like I would wait for a better rejection, and then on the lower time frames, I would look for it how price reacts that level. So it's currently reacting to this level. We have a small order block over here, right? This level. But we won't get back in because that's what I actually explained, that this is the place where most of the new buy orders get or smashed in, and then they have a stop loss hunt. So either ways, this could become a SR flip level, like this region could actually become a SR flip level, because that is the place where most of the times you got rejection, then once again up, then rejection, once again up, then rejection, and once again for the last time you broke that SR flip level, and then we placed back here. So either I would look for if we had a Fibonacci placed like the golden Fibs 0.618 and 0.702, the one I actually use on the better understanding of it you can have is if a chart on the H4 or the 1 hour does not make so much sense to you, switch to the high time frames or switch to the lower time frames to look for better entry. Like if you see here, there's a lot of order block influence. If we switch to the H4, we would see a fair value gap forming over here. That is the fair value gap. Let me remove the other resistances that I made. Okay, this is the fair value gap formation. Now switch to the lower time frame on the hourly, you can say. There is another order block that is respecting that level. See, if you see here, that is another level that is respecting here. If we switch to the more lower time frames, gradually I do from switch from 4 hour, then H1, and then M15. M15 is basically for entering, getting the sniper entries Okay, so if we see here on the H1, it's more clear on the H1 because there are a lot of order blocks that are in between this zone. So we look for the H1. And if you want to play along the setup, that is the place you would enter in, like a small entry over here, and then aim from the above highs. Similarly, if you want to have a little more patience to it, price can eventually respect this order block. I won't say that it would respect the same day, but eventually in some coming days, it would respect this zone too. And an order block with a Fibonacci retracement is one of the best one that you can have for a conference to the chart. Another aspect to it would be some price and discount zones. If you look here, let's do it on the BTC chart. Okay, so if you look here, that was the Monday low and Monday high formations. Pretty much it. We have premium and discount zones. Anything below this blue zone is a discount zone, means that I would look for long entries. Anything above this red zone is the premium zone, means I would look for long entries. So if you see over here, one of the setups that we took on it was Sui, I guess, and I shared in the staff list too. I guess, let me show. Sure. If you see here, this was the premium and discount levels marking this high and targeting this low. That was a small SF flip and also an order block area. What we actually did for this setup was actually it went up almost 12.8% above from our entries. And the reason it was a sniper entry was just because of the reason that there was a lot of liquidity built up over here. And we had our limit here order on the liquidity present over here. If we see here, we got filled onto that liquidity area. Also, the price was in a discount zone, means I would be looking for long entries. And there was a meme line also here, but I won't confirm that meme line is much, but it's just for the sake of, you can say, a better understanding of how the PA is moving for that reason. So price actually respected that small meme line too. It bounced back from the order block. Get back in, we entered onto the key level, or you can say the liquidity region I marked, and price actually pretty much did a 12% move from there. So these are the levels that you can look for, or you can have a better understanding for how to trade these liquidity regions. I personally trade as more of liquidity zones because that's my thing, and I like to trade these levels a bit more. Just market had to be like, let's suppose if you come back onto the BDC chart here over here, what levels I would be seeing for a rejection here is this order block. Okay, so this is the bearish order block that we are looking for a rejection, the 38.75 area. Similarly, for a bullish season, we are looking to have a respect of this order block. The reason I won't count the wick is because if we examine onto the lower time frames, this wick won't be counted. Another example for that could be if we target the above order block over here. Let's say this one. So these are my long and short zones for now. One is we get a short order from 38.75. Similarly, we get a long order from 31.81. This is the range that I would be having my eyes on. Either we get a rejection or we keep moving up here and we get a rejection from the above order block to the lower order block or the liquidity zone, like targeting this. And similarly, we would have a range play, get back into the Monday low, make this liquidity as support, and get back to the above liquidity. That is how I pretty much trade these levels.
Yeah, awesome. Thanks for explaining all of that as well as your thoughts behind the trade setups. It's really insightful to be able to understand like the thought process and like the steps you take before you execute a trade setup. And yeah, looking at the current range Pretty much the gist of it is we're looking for a sweep of either buy side or sell side liquidity before we um, try to find a new Bitcoin setup. Would you mind having a look at Ethereum as well? And then we'll probably wrap up the stream.
Yeah, sure.
Cheers.
Okay, so this is a chart that I don't trade much because I like BTC more, but let's try to do it from the scratch. Okay, so this is a H4 support region. We see price actually try to break that, make it as a support dump, try to break that, make it as a support pump. Let's look for some resistances we have. One of the resistance is here. Okay, so similarly, what happened for Ethereum was it respected the support region that we had. It pumped back and tried to take out the stops. Reason that the body was closed here, actually use mental stop losses more than the predefined stop losses onto such coins or near CPI or PPI news, just because of the reason that your bias could be right, but you can get a stop loss hunt. Let's see if, let's say if you see over here, that was an easy shot just because of the reason if you had a Fibonacci placed over here, you got a limit order filled onto this level. If you place stops on the above high and you target this low, that was a pretty decent setup that you could look for. Apart from that, if we see onto the current market area, that is the Monday high and Monday low range forming. Similarly, as we talked about BTC, I would certainly wait for something like this to happen, make it as a support, and eventually it would go down. Either take one of the above liquidity or uh, lower liquidity first. If we see onto the premium and discount regions, mostly we are into the discount region where we look for some longs, but eventually the PF for Ethereum is quite a bit, uh, you can say a bit bearish than BTC. We can certainly see some reaction from 1922 levels, or either we could reject to the Monday or high, like just above 1908, and then we could target the lower liquidity that is 1843 to 1842 levels, or either we can take it a bit lower. That is just a support region 1823. Just reason because of that is we have an order block, the bearish order block that we have over here. That is that can we can have a rejection from there, or either we could come back to this order block that is quite recently sitting over here. So these are the ranges that I would be looking for. Either we reject from 1904 level, or we pull back to the 1920 or the 1980 region. Then we get a rejection. We look for a break of structure and enter onto the lower time frame, and then we target that lower liquidity 1845 region for the next 2-3 days or the next week, and then we get a good support from this 1823 level that is marked with as a support region. So these are the pretty much levels. I try to make it as simple as possible because I think about trading that alone is the more you complicate it, the more it becomes like not profitable for you. Stick to a strategy that is always and always like a bit good RR and a good profitable for you. Like just don't trade yourself, just don't judge yourself just by a single or 2 or 3 days trades that just go opposite to you. Take it slow. It's always I like one quotation is always that it's always a marathon and not a sprint. What you can get from this is that you can never make uh, ample amount of gains. Like if you want to become rich on the first day, it would never ever make sense, because if you actually get that gem, or if you actually got lucky enough to make certain gains, eventually it was against your discipline, against your trade plan strategy, and the same amount or the profits you made one day would be gone, or you would be sitting on your drawdown the next 2 or 3 days maybe. So it's always good to journal your trades. It's always good to stick to a plan. Probably my setups include four things. One is support region, one is resistance region. These are for high time frames, just to know how well we are respecting those liquidity regions, how well we are respecting those resistance liquidity levels. I like to specifically trade those liquidity zones just because of the reason that is where most of the FOMO kicks in. And that is where, if you have a certain short or long bias according to your analysis, you can actually know where the market would be taking you to the next for the next week or the next 2 or 3 days. That is how SMC works, and it was pretty much appreciated, Jodis, for explaining this good to you all.
Yep, awesome. And it's a really good point about trading being a marathon. So always keep a long-term perspective and stick to a sort of objective method of analysis, and always have a trade plan in mind. Whenever you resort to gambling, that's when the losses and tilts start piling in. So yeah, it's definitely very important to stick to the plan and treat trading as through a long-term perspective. So yeah, we're pretty much past the scheduled time for the stream. So uh, just a quick look at Matic before we sign off. Not too much to see so far. Reached the first profit target, so you should only have a partial position running on this trade, and we're just looking for a reaction near the OT fib zone, and I'll keep you guys updated. So yeah, I think the stream was pretty good. So Ahmed and I are discussing hosting weekly or bi-weekly streams where we just analyze the market, and then we can go further with our sort of explaining and education of smart money concepts. So let me know if you guys would be interested in that in the chat. And yeah, that'll pretty much be all for today. Thanks very much for listening. Thank you, Ahmed, for speaking today and sharing your insights.
Yeah, well appreciated. Thank you, everyone. Was a pretty good, decent session.
Yeah, for sure. Right, thank you, everyone. Stay safe, and we'll see you all next time.